Trading a stock just because it's trending online is like dropping a rowboat into the middle of the ocean without a map. The sheer force of the market will crush you if you don't have an anchor. If you find yourself consistently losing money on setups that everyone on social media is talking about, it's because you're mistaking attention for liquidity. Attention creates noise. It does not guarantee a clean, profitable trade. Over the next 6 minutes, I'll walk you through a step-by-step pre-market workflow. We will strip away the hype and filter the market down to just 2 or 3 highly actionable setups. Before we start filtering, you need to have a few things in place. First, reliable charting software with real-time data. Second, the VWAP indicator applied to your charts. And third, strict intraday focus. To be clear, this system is engineered strictly for day trading. We are looking to enter and exit within a single session to capture momentum, not hold positions for a long-term investing portfolio. Once you stop reacting to what the internet is yelling about and start running a mechanical pre-market checklist, you isolate the trades that actually have an edge. Step 1 is sourcing our tickers. Most traders just scroll a newsfeed and jump at the first headline they see. Instead, we use the overlap method to cross-reference 3 distinct data streams. The first stream covers market events, tangible catalysts like earnings reports, analyst upgrades, or SEC filings. The second stream is crowd attention, which tracks social media buzz and mainstream momentum. This diagram shows how those sources intersect. But the third and most vital circle is real-time volume. As you can see right in the center, high volume acts as the ultimate lie detector, proving whether the news and social hype actually carry weight. Step 2 is the liquidity filter. A stock has to prove it has what I call day trade survivability before it ever makes it to your active screen. Look at these 2 charts. On the left, you have jagged, broken candlesticks with empty spaces between them. That means wide bid-ask spreads and severe slippage. On the right, the candles are smooth, continuous, and tightly packed. That shows deep, tradable liquidity. Here is the hard rule. If a trending ticker looks like the broken chart on the left, you drop it. It doesn't matter how hot it is on a message board. If you can't get in and out cleanly, it's immediately disqualified. Your daily profit doesn't improve by trying to predict perfect breakouts. It improves because you ruthlessly cut out garbage, illiquid setups before the opening bell even rings. Step 3 is confirming momentum. There is a massive difference between a stock that is casually drifting upward with the rest of the market and one that is showing distinct relative strength. This graph measures our target stock directly against the S&P 500. The flat gray baseline represents the broader market index. The bold green line diverging upward clearly proves our stock is outperforming the baseline and attracting dedicated buyers. Zooming in on the price action, check the volume bars at the bottom. They surge tall and green as the price climbs, and then immediately shrink on the red pullbacks. That specific pattern is the footprint of aggressive institutional buying. Step 4 is the level check. We drop the VWAP on our chart. That's this thick, glowing line. Watch how the price action repeatedly dips to test VWAP, respects it as a floor, and bounces upward to form clear higher lows. Conversely, look at this second scenario. The price violently chops back and forth across the VWAP without ever holding it as support. This erratic pattern is the definition of a bull trap. To pass this step, the ticker must consistently respect these key levels. If it cannot hold above VWAP and defend its prior highs, it gets scrubbed from the list. Forcing the chart to prove its momentum through relative strength and clear level holds removes the guesswork. You stop wondering if a breakout is genuine, because the volume and price structure are already confirming it. Step 5 is defining the entry plan. We don't trade based on gut feelings or assumptions. Every entry must follow a strict mechanical 3-part sequence. You can see the first 2 parts of the formula highlighted here. The setup defines the exact chart conditions required, like holding above VWAP. The trigger is the precise moment you execute, such as a clean break of resistance. The final non-negotiable part is the invalidation level. This is the exact price point on the chart where your thesis is proven wrong, and you take a hard exit. If you trade without a defined invalidation level, you will inevitably freeze. Instead of cutting a small loss, you hold the position and hope the stock recovers. Hope drains accounts faster than anything else in the market. Step 6 is timing and alerts. Watch the cursor right-click to set a green alert line exactly at our trigger and a red alert line at our invalidation. Once these are set, the software monitors the chart for us. This protects you from what I call attention decay. By midday, volume usually fades. Instead of staring at a dead chart, you walk away and only return when your alerts fire, confirming that momentum has actively re-accelerated. Defining your exact exit point in advance and letting the system watch those levels strips the emotional bias and paralyzing hesitation entirely out of your execution. We started with a chaotic, overwhelming feed of random tickers being pushed on social media. Now you have a highly curated, logical watch list built entirely on factual price action. I want to hear how this applies to your process. Drop a comment below and tell me your most frequent point of failure. Is it picking the wrong tickers, entering too late, or holding a loser too long because you didn't have an invalidation point? To help you systematize this, I've organized the entire workflow into this one-page trending to tradable checklist. You can download it right now and use it to filter your setups tomorrow morning. In the next video, we're taking this process into the live market. I'll break down live execution and show you exactly how to manage the trade once that trigger alert actually fires. A professional day trader doesn't guess where the market will go. They rely on a mechanical system that cuts out the noise, waits for the right conditions, and executes the plan. I'll see you in the next one.